Warning, there is some upkeep and maintenance required should you choose to use this indicator. But if the juice is worth the squeeze, then who cares? Happy Wednesday, everybody. It is the Indicator Profile series for May 1st, and we have the Smooth Momentum Indicator. We like things that are smooth. We like momentum here at No Nonsense Forex. So let's see what this is all about. Now, if you're new, also fair warning, this won't make a whole lot of sense to you because we talk and do things a certain way. What you need to do is go back to the beginning. Go to NoNonsenseForex.com. Read the first page, watch that first video, get caught up. It's going to take time, but once you're here, you're going to have a lifetime skill you can use for any market you choose. But for the rest of us, let's go ahead and move forward into the specs for the Smooth Momentum Indicator. The year is going to be 2015. This is going to be a confirmation indicator. This is going to be not a zero-line cross, not a midline cross. I guess it kind of is a midline cross. I'm just calling it a line cross, and you'll see what I mean. This is going to be a bit of a unique indicator compared to what we've seen in the past. And for exits, I don't love it. You'll see why in just a moment. But let's go ahead and take a look at the visual side of it right now. So here it is. Now, you'll notice it's a bit jagged. We do smooth it out later. A bit strange for the Smooth Momentum Indicator to look like this on the surface. But once we're done with it, you guys know how it goes. It looks a lot nicer. Now, what you do here is when the yellow line crosses above the horizontal blue line, that will be your signal to go long, and then when it goes the other way, crosses and closes below the blue line, that is your signal to go short. Now, the reason I included all this other stuff here, you can't see this number, but it doesn't matter. It's all in the blog. You know, I tell you, you're going to need the blog for a lot of things. You are going to have to rely on it this week because Dan will show you how to calculate this number right here. Now, it's 100 currently, but this number could really be anything based on what the upper band and lower band say. You need to find the in-between of the upper and lower band, and it's not always going to be 100. And then here's the real bugaboo of the whole thing, is it's not going to happen a whole lot. But if these upper and lower band numbers ever change, then in order to keep this accurately in the middle, this number is going to have to change too. You're going to have to redo the calculation. Again, it's not a very long calculation. It's just an average between top and bottom. But you will have to adjust your line. Now, pro tip, you can wait until the yellow line has kind of come back off the bottom or the top. Because if it's up here or if it's down here, you're not going to be making any trades anyway. So you can kind of wait for things to settle down and reset themselves and then make your adjustment. So on this one, you've only really had to do it twice. Once, way back here, and then another one here. Now, if you're trading 36 pairs, you're going to have to do this more than other people would, I suppose. But again, if this indicator really works for you, we're not talking about a lot of maintenance here. We've already kind of spoiled you by giving you a system that once you have it in place, it's 10-15 minutes a day tops of you checking in. So if this indicator is doing really well for you, then this amount of maintenance I don't think is a whole lot. But it does exist. And I needed to point that out to you before we move forward. And if anything I said confused you, full details are on this week's blog, which you will find down below at the very bottom of the description. But let's go ahead and see how it did before we do that. Understand, you have to test this in your system no matter what it looks like here. You might be very pleasantly surprised. You might be very unpleasantly disappointed. But that's not our problem. We use the MT4 strategy tester to try and optimize, and that's what we do here. And then I show it to you. Very simple. And if there's any confusion, we have you hooked up to the guilds down below in the links. For starters, we show you how to test this yourself using the MT4 strategy tester. You're going to get a link to my automation blog that has an embedded video showing you how to do that. Also, the blog, like I told you about, if you want to see tweak settings or the history or how the hell to use this thing, Dan goes in fuller detail, so I don't have to. You can also go to his YouTube channel to see this thing move in real time to show that it doesn't repaint, and a few other little tidbits of information that I may not share here. If you want to submit an indicator for us to profile here, we've done a handful of them before, and they've been very good. Thank you for that. But there's a special email address you'll need to send it to. Don't talk about, why haven't you profiled this in the comments section? That's not going to have any effect. Go here. And the most popular place in all of the internets, it is the link to the indicator library. We can download this indicator and every indicator we've profiled here on the Indicator Profile series. Let's go ahead and move into the results, starting with the euro dollar. And this is pretty strong. I don't know if you guys are testing indicators right now, but we certainly do. And to get close to 9% on the euro dollar right now is quite a feat. And look at that win-loss ratio too. Now, as it has been for a while, you remember when the 4-hour traders had their time in the sun and they were killing all the daily chart traders as far as results go? The tables have flipped since, and we're just not getting much on really anything on the 4-hour lately. So sorry, 4-hour traders, it is what it is. Hopefully things will correct over time, but they often do. Moving over to gold, and this is really good. We have seen better results for gold than we have everything else recently. But to get into the upper 30s, I think it's been a while since we've been up there. Really good win-loss ratio, too. I'm telling you, this thing gives it to you when you smooth it out. And honestly, really not bad on the 4-hour either, 80%, even though it's only 20 trades. That's still good. Maybe with your exit indicator, you would get a higher result than that. But overall, we're very happy with gold. Not so much on the S&P, but that's just kind of how it's been. Again, crazy win-loss ratio on this thing. Hopefully you can do better than close to 5%. This would be a bit low compared to what we normally show you here, but it's not terrible. And it is certainly worth testing if you are a daily indices trader. And then finally on Bitcoin, these are not going to be good results compared to what we've normally shown you here. Again, wildly good win-loss ratio. Maybe you can do something with that. But I can tell you too that these were tested before the last drop we've had. So good or bad, that has yet to factor in to these calculations. So a very interesting conundrum to play with here. Is this worth going in 2 or 3 times a year and adjusting that line per pair traded? It very well could be. This is not the best trading environment, as far as a 12-month scan that we have been in. And this one still managed to perform really well and give you a great win-loss ratio across the board, which is something you could probably leverage. The decision is yours. The decision is yours to also subscribe and hit the bell, but please do that for us. At least give us a like. We're bringing you the Trading Psychology podcast every other Monday, Indicator Profile series every other Wednesday, blog on Thursday sometimes. We've been pretty good with those lately. Expect one tomorrow morning. And then every Saturday, the 10-Minute Contrarian Investing podcast. Through the good times and the bad times, we are here for you. And I'll see you soon. Go get it.